Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway, created exclusively for Mortgage News Network and brought to you by our good friends at PRMG, working for your best interest. A lot of housing data last week and a big jobs number to look forward to this week, so it's going to get pretty volatile. Lots of things to talk about, so let's get you caught up. So what's the health of the housing market? Pretty darn good, except if you listen to the media, of course, who have a negative bias and really don't understand how these things work. So first of all, let's break down some appreciation numbers from the gold standard, which is Case-Shiller, and in addition to that, FHFA. Now, FHFA measures appreciation on homes with a conforming mortgage. So while it doesn't have to necessarily mean homes that are perhaps under $500,000, which is a pretty hot area of the market, you can assume that these are mostly homes in that price range, and they are doing very well at 5.6% year over year. Now, as you get higher up in the scale, homes are appreciating less. They move a little bit less, especially above about $1.5 million in some markets. We are hearing that there is an area that they move, but they move more slowly. We're not seeing that level of appreciation. So when we take a look at the Case-Shiller number now, that tells you a wide swath. And in the national area of appreciation went from 4.6% to 4.2%. Really not bad at all. 4.6 was pretty good. 4.2 still very good. It is a decline. But remember, when you take a look at these numbers over the winter months, few things had happened. A lot of the country was soft as far as appreciation at the end of the year because we did see interest rates not start to decline until December. We saw home prices definitely were slowing. The stock market in the fourth quarter took a big dip, didn't make people feel anxious to buy. So this was a kind of a normal letdown. Look, the peak is typically in June as far as levels of appreciation that we see. So we tend to see things slow down after June anyway. Speaking of that, I think we're going to have a very good home buying season. And evidence of that starts with numbers that are for pending home sales. That's signed contracts on existing homes. We got the numbers for February. And then new home sales, that's signed contracts for new construction. We got those for February. So new home sales was a beat. It was a really good number. It was 5%, expecting to be 1%. So that was really good. Now, pending home sales for the month of February, which is, again, signed contracts on existing homes, that was a miss. It was down 1%. The market was looking for it to be down 0.8%. So kind of in line, 0.2% worse. But boy, oh boy, did the media make a big mess out of this thing. Diana Olick on a rampage saying how terrible the housing market is, how home prices are going to be heading lower. Just unbelievable. When you take a look at this, the reason for the drop happened in the Midwest. That was the big drawdown overall. And goodness gracious, in February, and I don't have to tell those of you that are in the Midwest, we all remember the polar vortex, okay, the pretty difficult temperatures. So maybe some folks didn't feel like trudging out and looking for homes in very uncomfortable weather to do so. So I think you're going to see a really nice snapback come March and April and May. You're going to see some really good numbers that are out there in housing. The people I talk to around the country are telling me that they're busy and homes are moving. As long as they're priced reasonable, they're moving. So look for some good numbers. Now this week we do get the jobs number, and that's going to be very important for us because that can move the markets. Mortgage rates, interest rates on bonds are at very important levels. The 10-year Treasury right now flirting with 241. That's an important level. If we can get under 241, that's going to be a really good sign for us. But we've come a long way down in a short period of time. Lots of times you see like a breather at these levels. If you see a move over 241 to 242, 243, there's a really good probability that we hit 257 on the 10-year. That doesn't mean rates go up from there. It just means that we will probably see a little bit of a pullback over a short period of time before the downtrend continues. The first marker, if we get over 242, 243, will be 2.5. Look at 2.5 as kind of a line in the sand because that's the trend line. We have 2.5 and yields go lower from there. That means we're still in a downward range for yields. We just start trading within that range, but the overall momentum is still for lower yields. So we have kind of a floating bias, but one that needs you to be very careful. And if you want to follow this every day, if you want to give this information to your customers, if you really want to be an advisor instead of a salesperson, protect your business into the future, why don't you just make the move, get on MBS Highway like everybody else who's knocking it out of the park is, and make yourself some extra money. Talk to you next week. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.
This is Mortgage News Network.